Welcome back, everybody. Today, we're going deep, diving into asset management and investment manager investing.
Oh, this is going to be a good one.
Yeah, it's a big one. And, whether you're prepping for some big meeting or just trying to stay on top of all the finance buzz, or maybe you just, I don't know, really want to get this stuff, we've got you.
For sure.
We're going to be looking at some excerpts from pasted text
Yeah.
to help us sort of break it all down.
Yeah.
Okay, let's unpack this whole world. Asset management?
Well, think about a ship captain navigating a course through some really tricky waters.
Oh,
That's kind of what an asset manager does for your investments. They're there to guide you, make sure you don't hit any financial
yeah, they
icebergs.
help you reach your destination financially.
Exactly. The core of it is to help individuals and institutions reach their investment goals. It's all about that personalized roadmap.
So like whether it's early retirement, saving for a house, or just building wealth, they're like your personal financial advisor.
Yeah, but on a larger scale, they work with individuals, institutions, using their expertise to design and manage those investment portfolios, making sure they're tailor-made for each client.
Okay, so not just throwing darts at a board and hoping for the best.
No, 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 it's way more strategic than that. It all starts with really understanding the client's investment objectives.
Like what are they actually hoping to achieve? What are their big dreams?
Exactly. What are their financial aspirations? How much risk are they comfortable with? What's their time horizon for investing? It's like laying the foundation before you build the house.
Got it. So it's super client-centric, right?
Absolutely. It's not one size fits all. They work closely with each individual or institution, so every strategy is personalized.
So once you know the client's goals, how do you actually build that investment portfolio?
Well, that's where asset allocation comes in. Imagine building a balanced meal, but for your money.
Oh, I like that. So you're not just loading up on carbs, right?
No, you want a healthy mix. You diversify your portfolio across different asset classes, stocks, bonds, real estate, even things like private equity or commodities. You got to spice things up a bit.
Okay, so I've heard about diversification, but I don't really get it. Why is it so important?
Well, imagine putting all your money into one stock. If that company tanks, your whole portfolio goes down with it.
Ouch.
Right. But if you diversify across different asset classes and sectors, you're spreading the risk. Even if one investment doesn't do well, others might be rocking it, cushioning the impact. You don't want all your eggs in one basket.
So it's like a safety net.
Exactly. And the specific mix in your portfolio will really depend on your risk tolerance and how long you plan to invest.
So someone younger who's got more time might have a different mix than someone closer to retirement.
Yeah, you got it. A younger investor might be okay with more stocks, which can grow faster but also be more volatile. Someone closer to retirement might want more bonds, which are generally less risky.
Makes sense. Now, within each asset class, are there different strategies they use?
Oh, tons. For example, with stocks, you have active management and passive management. Think of it like cooking. Active managers are like chefs, picking and choosing each ingredient, trying to create the perfect dish.
Creating that masterpiece.
Exactly. Passive managers are more like a meal kit. They follow a set recipe, aiming to track a market index like the S&P 500.
So like choosing between a gourmet meal and a reliable, tasty meal kit. Both good, but different approaches.
Perfect analogy. And choosing between active and passive really comes down to your own preferences, risk tolerance, and how much you want to pay in fees. Active management tends to cost more because you're paying for that expert chef, so to speak.
Okay, all this sounds pretty complicated.
Huh.
How do I know if I need an asset manager or can just handle my own investments?
That's a great question, and a lot of people ask that. If you've got the time, the knowledge, and really enjoy researching and managing your money, DIY might work for you. But for a lot of people, the markets are just too complex and it takes a lot of time. So working with an asset manager can be super helpful.
Right, because it's more than just picking investments. It's knowing how to navigate the market, making those decisions based on all sorts of factors.
Exactly. Asset managers aren't just throwing darts. They're doing deep research, looking at economic trends, market conditions, individual company financials, all to find those promising investment opportunities. They're like financial detectives in a way.
Wow, so much more than I realized.
And they don't just focus on gains, they're also really focused on managing risks.
Risk management. Tell me more about that.
It's crucial. It's all about identifying, assessing, and mitigating any potential risks to protect your investments while still aiming for growth. Think of it like putting on your financial seatbelt.
Oh, okay, I see. So like, what are some of the tools they use?
Well, they might use things like diversification, which we
Hmm.
talked about, or hedging strategies, which are kind of like using financial instruments to offset potential losses. They might also use stop loss orders, which automatically sell an investment if it drops below a certain price. It's like having a safety net under your investments.
So it's like they're a whole team of experts looking out for your best interests, making sure your investments are on track.
Right. And this all happens within a strict ethical and legal framework. Asset managers have what's called a fiduciary duty to act in your best interest, putting your needs first. It's all about trust and accountability.
That's really good to know. So we've covered how they build portfolios, manage risk, operate ethically. But what about the people actually making those day-to-day decisions, buying and selling? The investment managers.
Right. The captains of the ship, so to speak,
Hmm.
they make those crucial decisions based on the strategy set by the asset management firm. They're the ones in the trenches.
Let's dive deeper into their world. What are some key things they do?
Well, first off, they need to really understand the markets, the specific assets they're investing in. They're analyzing financial data, identifying trends, spotting opportunities, the whole nine yards.
Hey, it's like they need to be pretty sharp.
Oh, absolutely. They got to be quick on their feet, making decisions in ever-changing markets, and they have to be great communicators too, explaining their decisions and giving updates on how the portfolio is doing. No room for wallflowers in this job.
It sounds intense, but also fascinating. They're on the cutting edge, making decisions that affect people's lives and their financial futures.
Exactly. It's high pressure, high stakes, but can be incredibly rewarding. What's really cool is that there are so many different approaches and styles. Some focus on value investing, seeking out those undervalued companies that have a lot of growth potential. They're like those treasure hunters looking for hidden
I
gems.
love that.
Others might specialize in growth investing, targeting companies with high expected earnings growth, even if their current value seems high. They're betting on the future, on potential.
So there's an investment style for every type of investor, it sounds like.
There really is. And the key is finding the one whose style and approach matches your goals and how much risk you're comfortable with.
This has been so helpful. We've covered so much, from the basics of asset management to the different roles. Now I'm wondering, with so many different investment styles, how do you actually find the right investment manager for you? It's got to be like finding a needle in a haystack.
Yeah, it can feel overwhelming for sure. But there are some things you can look for to kind of narrow it down. First, you got to think about your own goals and risk tolerance. What's important to you? Growth, income, a bit of both. Are you comfortable with big swings or do you like to play it safe?
Makes sense. You wouldn't hire a mountain climber to guide you across a desert, right?
Exactly. Once you've got a handle on your own needs, then you can start looking for managers whose expertise and style align with what you're after.
So if I'm all about long-term growth and okay with a little more risk, I'd look for a growth-oriented manager.
Yep, that's the idea. You can usually find that info in their prospectus or marketing stuff. It'll outline their philosophy, strategies, target markets, all that good stuff.
Okay, that makes sense. But besides their style, what else should I be looking for?
Well, their performance track record is definitely important. How have they done in the past? Consistently beating the market or lagging behind? You can find that on financial websites like Morningstar or directly from the manager. But keep in mind, past performance doesn't guarantee future results. It just gives you a sense of their experience.
So it's like looking at a chef's past dishes. Gives you an idea, but no guarantee the next meal will be the same.
Perfect analogy. You should also look at their fees and expenses. How much are they charging? Are those fees in line with others who have similar strategies? Because those fees can really eat into your returns, so it's important to factor that in.
Right, like anything else, you get what you pay for, but you don't want to overpay.
Exactly. Got to find that balance. And don't underestimate a good client-manager relationship. Do you feel comfortable talking to them? Trust their judgment. Do they explain things clearly and answer your questions? That's all super important.
So it's not just about the numbers. It's about finding someone you can trust, communicate with effectively. Kind of like finding a good doctor, right?
Exactly. It's a partnership. You got to feel confident you're working with someone who's got your back.
This is great advice. So we've talked about finding the right manager. Now I'm curious, what happens behind the scenes? What systems and processes do asset managers use to actually manage those portfolios?
Well, research is huge. Asset managers have whole teams of analysts constantly gathering and analyzing information, about markets, industries, individual companies. They're using all this research to find potential investments, make those smart decisions about buying and selling.
So no gut feelings or throwing darts. It's data-driven.
Oh, absolutely. Data is king in this world. They're also using super sophisticated software and tech to track everything, analyze risk, execute trades. Think of it like a high-tech command center for managing
I
investments.
like that.
And of course, there are all those compliance and regulatory requirements, making sure everything is ethical and above board, protecting the clients.
Good to know. Makes me feel better knowing there are systems in place.
Absolutely. Regulation is key. Now, let's circle back to risk management.
Right, because even with the best research, sometimes things don't go as planned, right?
Of course, risk is always there no matter what. But good asset managers have strong risk management processes to keep potential losses to a minimum. They're always thinking ahead.
So what do those techniques look like? Can you give me some examples?
Well, diversification is a big one. We talked about it before, but it's so important. By spreading those investments across different asset classes, sectors, even different countries, you can really reduce the impact if one investment goes south.
Like having multiple safety nets.
Exactly. Another one is hedging, using things like options or futures contracts to kind of offset potential losses in other investments. Think of it like an insurance policy.
Oh, I see. Interesting.
They also use really complex models and algorithms to constantly assess the risk of the portfolio and spot any red flags. That way, they can make adjustments, keep everything running smoothly.
Like having a team of financial engineers on the job.
Precisely. And on top of all that, good managers are constantly communicating with their clients, keeping them in the loop about performance, risks, any changes to the strategy. Transparency is key.
Transparency and communication. It sounds like a good relationship, actually.
It should be. A good asset manager will be a partner, explaining things clearly, answering questions. They want their clients to feel informed and empowered, not left in the dark.
I love that. So we've learned so much about the inner workings of asset management, from the big picture strategies to the day-to-day details.
It's a fascinating field, constantly evolving, but at the heart of it, it's about helping people reach their financial goals through smart, responsible investing.
Couldn't agree more. Now, as we wrap up, any key takeaways for our listeners? What are the most important things to remember about asset management?
Well, I think it's important to remember that asset management isn't just for the super rich. Anyone who wants to grow their wealth, achieve their financial goals, can benefit from it.
So true. It's not about how much you have. It's about making smart choices with what you've got.
Exactly. Another key takeaway is that it's a long game, not a get-rich-quick scheme. Don't get distracted by those short-term market ups and downs. Focus on building that diversified portfolio that aligns with your goals and your risk tolerance, and stick with it.
That's such good advice. It's so easy to get caught up in the hype, but staying focused on the long term is key.
Absolutely. And lastly, you don't have to do it alone. There are experienced asset managers out there who can help you navigate the markets, make those tough decisions.
Like having a trusted guide, right?
Precisely. And the best ones will work with you as a partner with clear communication, expert advice, personalized strategies, helping you reach your destination.
This has been amazing. Thank you so much for sharing your expertise. For our listeners who want to learn more, what resources or next steps would you recommend?
Oh, there are tons of great resources online and in libraries. Websites like Investopedia or Morningstar have great articles and research. Those are good starting points.
And if someone's ready to start working with an asset manager, how do they find a good one?
Word of mouth can be great. Talk to trusted friends, family members, see who they've had good experiences with.
Makes sense. You're more likely to trust someone with firsthand experience.
Right. You can also search online, look at professional organizations like the CFA Institute. They have directories.
And don't be afraid to interview a few different managers before choosing one. It's like finding the right doctor or lawyer, right?
Right.
You want to feel good about who you're trusting with your financial well-being.
Couldn't agree more. It's a big decision. Take your time, do your research, and ask lots of questions. Don't be shy.
Great advice.
Oh.
Wow, what an informative deep dive this has been. We've covered so much, from the basics of asset management to finding the right manager, even peeking behind the curtain at those processes that make it all tick.
It's been a pleasure. I love talking about this stuff.
Now, as we wrap up, I want to leave our listeners with a final thought to chew on. Given everything we've talked about, how do you see the world of asset management evolving in the future? What new tech trends, challenges might shape the industry?
Ooh, that's a good one. I definitely see AI and algorithms playing a bigger role, that's for sure. But for now, let's bring it back to something you mentioned earlier. Those regulations that keep everything running smoothly.
Right. It's easy to get caught up in the returns and strategies, but those safeguards are crucial. What keeps it all on the up and up?
Absolutely. Think of it like the foundation of a house. Might not see it, but it's what keeps everything stable and secure. In asset management, we have all these rules and regulations designed to protect investors and the integrity of the market. It's all about trust and accountability.
So it's not just handshakes and good intentions. There are actual laws governing all this.
Oh, yeah, for sure. And they cover everything from licensing for asset managers to rules about how client money is handled and invested. Conflicts of interest, disclosures, reporting standards, the whole nine yards.
Okay, so that makes sense.
Yeah.
But how can I, like a regular person, check if a manager is actually following those rules? I don't have access to some secret database, do I?
You actually have more power than you think. Registered asset managers have to be transparent about their operations and fees. You can find a lot of that on their website or in their regulatory filings, which are public.
So there's homework involved. Can't just take their fancy brochure at face value.
Definitely not. Always do your due diligence. Look for any red flags like super high fees, vague strategies, or if they're not being upfront about things. You can even check with regulators like the SEC to see if there have been any disciplinary actions against them.
So it's like checking online reviews before trying a new restaurant, but with way higher stakes.
Exactly. It's your money, your financial well-being. You gotta be smart about it. Don't be afraid to ask tough questions and get everything in writing. Knowledge is power, you know?
Right.
The more you understand the rules, the better you can protect yourself.
This has been so eye-opening. I think a lot of us, myself included, thought of asset management as this mysterious black box. But you've really shed some light on how it works and why those regulations are so important.
Glad to hear it. At the end of the day, asset management is about empowering people to reach their financial goals. But that empowerment starts with understanding the system, asking the right questions, and making those informed choices.
Perfectly said. Okay, to wrap things up, let's bring it back to our listener. They have heard about portfolios, styles, risk, regulations, all of it. What's the one piece of advice you would give them as they start their own financial journey?
Remember, everyone's journey is different. There's no magic formula. Take your time, figure out what you want, how much risk you're comfortable with, what's important to you. Do your research, ask questions, and don't be afraid to get expert help if you need it. And most importantly, stay engaged, stay informed. The more you know, the better you'll navigate the financial world and achieve your dreams.
Fantastic advice. It's been a true privilege having you on the show today. To all our listeners out there, keep exploring, keep learning, and never stop investing in yourselves. We'll be back with another deep dive soon, so stay tuned.
Yeah, a lot of people don't think about that part, do they?
No, not really. They just think about, I want to make money.
Yeah.
But it's like, okay, how do we make sure that everyone's playing by the rules?
Right. It's got to be like a level playing field.
Yeah, so let's talk about that. What are those
Yeah.
rules? How does that actually work?
Right. So it's not just about, trust and hoping for the best.
Right.
There's a whole framework of regulations designed to protect investors, and make sure the markets are fair and transparent. It's about integrity.
Yeah. Yeah, so there are laws that govern this whole thing.
Absolutely. It's
Right.
like the foundation of a house.
Okay.
You might not see it, but it's what keeps everything stable
Right.
and secure. So in asset management, we have all these rules about licensing asset managers, how they handle client funds, how they invest the money, disclosures, reporting standards, conflicts of interest.
Okay, so it's pretty comprehensive.
Yeah, it's pretty thorough.
But how do I, as an everyday investor, actually check if someone's following the rules? It's not like I have access to some secret government database.
Well, you actually have more power than you think. First off, all registered asset managers have to be transparent, about their operations and their fees.
Okay.
You can find a lot of that on their website or in their regulatory filings, which are publicly available.
Okay, so I got to do my homework. I can't just trust a fancy brochure.
No.
Yeah.
Definitely not. Due diligence is key. Look, for any red flags, like crazy high fees, vague investment strategies, if they're not being upfront about things, that's a bad sign.
Yeah.
You can also check with regulatory bodies like the SEC,
Okay.
see if there have been any disciplinary actions against the manager or their firm. It's like checking online reviews before you try a new restaurant, but with much higher stakes.
Right, exactly.
Yeah, so it's your financial well-being we're talking about.
It's a big deal.
Don't be afraid to ask tough questions. Get everything in writing. Knowledge is power.
I like that.
The more you understand about the regulatory landscape, the better you can protect yourself and your money.
I love that this has been so eye-opening. I think for a lot of people, and myself included, asset management was kind of a black box, but you've really broken it down and shown us how it works and why those regulations behind the scenes are so important.
Well, that's what I'm here for.
Yeah.
Demystifying it all. right? Because at the end of the day, asset management is about helping people reach their financial goals.
For sure.
But that starts with understanding the system, asking the right questions, and making informed choices.
Love it. So to wrap things up, let's bring it back to our listeners. They've heard about portfolio construction, investment styles,
Yeah.
risk management regulations, everything.
Right.
What's the one piece of advice you'd give them as they embark on their own financial journey?
I would say remember that your financial journey is unique to you.
Okay.
There's no one-size-fits-all approach. So take the time to really understand your own goals, your risk tolerance, your values. Do your research, ask questions, and don't be afraid to seek out expert guidance when you need it.
Yeah.
Most importantly, stay engaged, stay informed. The more, the better equipped you'll be to navigate this world and achieve your dreams. It's all about empowerment, you
Yeah.
know?
Empowerment. Yes. I love that. That's a fantastic note to end on. It's been such a pleasure having you on the show today, sharing your expertise.
Oh, thank you so much for having me. I've enjoyed it.
Absolutely. To all our listeners out there, keep exploring, keep learning, and never stop investing in yourselves. We'll be back with another deep dive soon, so stay tuned.